Hi there traders and welcome to the daily recap show for yesterday's US session, which was Wednesday the 4th of January. So, hope you find these reports useful. Please come subscribe to my YouTube channel. Also, sign up for the Keyzone service. It is still completely free for the next couple of weeks before it becomes a subscription-based service. So if it's adding value to your trading, please sign up and you'll be open to special launch offers when we go live with our subscription-based service. So, starting with the S&P from yesterday, these were the zones of reference that we had. We said that the S&P continued in its range, so it was a very similar report to the day before. The top of the range was at 38.84 to 38.91. Aggressive support was at 38.20 to 38.26, although it was in the middle of the range, so it was high risk. Better support came in at 37.94 to 38.01. We also had the 3 p.m. news and the 7 p.m. FOMC rate announcement yesterday. So let's go and have a look at the S&P. Okay, so this is the action from yesterday. You can see we just opened up in that chop zone, and we then the news come out here at 3 o'clock, and the market pushed down into this aggressive support zone. We do have a liquidity grab of that zone, but there's no real clear swing low for me to really get excited about, especially as it was an aggressive support zone. If we'd just taken out the liquidity from this overnight low here, and saw this pattern closing back above here, then that would have been valid. I would have really liked that trade, especially if it had connected with this red line, which is actually the previous day's closing price. So that would have been better if it was just a little bit higher and the entry was just above this London low, because it would have grabbed the liquidity from that swing low there. And that said, that trade did work. And then after that, you can see it respected the zones fairly well. We come up here, we tested this zone, we reacted from this zone. And then at 7 o'clock here, we got that FOMC chop. We did then actually get a couple of pushes down into that aggressive support zone. And notice here, we did get that liquidity grab of that overnight low zone. This one, the close was just below that overnight low. It's not the best reversal signal. That one did work. So I noticed it did work as soon as we got that close back above that signal. Then we come down again. We didn't quite take out this liquidity here on this retest either. So lots of very close but not perfect setups yesterday on the S&P. And I guess that's probably a lot to do with the fact that we did have that news out, and especially with the FOMC as well. So a few things where the zones, especially that aggressive support zone, you can see it worked well, but it just didn't quite do the things that I personally have as part of my trade plan to get involved in. So that's the S&P. Now let's go and have a look at the Dow. Okay, so these were the zones of reference that we mentioned in the Dow, and again, very similar report to the S&P, and we said that the Dow continued in a range, so it was a very similar report. Top of the resistance of that range was at 33,450 to 33,500. Aggressive support was at 33,125 to 33,175. Again, mentioned that was in the middle of the range, so it was high risk. So let's go and have a look at the Dow from yesterday. Okay, so the market opened up here, and again, on that news, the Dow pushed right down in below that aggressive support zone. We actually got a deeper acceptance below. It actually held from the minor zone of support that we had below there. We then came up, if we had got, we actually do have a bit of a continuation pattern here, this sort of pin bar here. If you had taken that trade, that's probably a valid trade with the impulsive push retest and then the continuation. That would have been a losing trade though, and then we came up, we pushed back above this. Once we got the acceptance back above here, we then do have a bit of a false break continuation pattern there, which then pushed higher. So if you had lost that one, you could have actually taken that one to recoup the losses. Both of those, though, just show that the market was a little bit choppy yesterday, and especially with this being an aggressive support zone, it was higher risk. But yeah, after that we got some more chop into the FOMC, and again, very similar to the S&P, we just got that post-FOMC chop. But with the Dow, we just continued to chop around this zone. No real clear signals, no real entry points at all. So S&P respected the zones a much more yesterday, but didn't quite do the things that we needed it to do to get an entry signal. Dow did have these couple of opportunities, but they were both high risk and not high probability, in my opinion. So not much to do on the US session yesterday. We are still at the moment in the range. We're coming into the US session for today. We are still in the range. We do have NFP tomorrow. That may be the catalyst to break us out of it. We may see this chop continue for today and into tomorrow. But hopefully once that NFP release gets out of the way, then the markets will move, show its hand, and offer us some more opportunities. So I hope you find these reports useful. Please comment and let me know how you're getting on. I hope you're having a great week. I'll speak to you soon. Cheers.